expose the rigging. The U.S. government was secretly rigging the gold market. The dollar will go down, government bonds will go down, but correspondingly the monetary metals will rise in value.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, we're in the safe house, the Gold and Silver Vault in Singapore, and we have with us Chris Powell, the Secretary and Treasurer of the Gold Antitrust Action Committee, otherwise known as GATA. Chris co-founded GATA back in 1999 in an effort to expose the rigging of the gold market by Western central banks and their investment bank agents. And we're delighted to have Chris here today with us in the safe house. Chris, welcome to Singapore, and how are you doing?
Oh, I'm delighted to be here and thrilled by your interest.
Thank you. We're happy to have you, Chris. Can we start just by having you tell us a little about your background and what were the circumstances that got you to create GATA back in 1999?
I've been a newspaper editor in Connecticut in the U.S. For almost 50 years. I'm really just a columnist now. I retired as managing editor, but I had some interest in antitrust law because of my newspaper work. We had to engage in a few antitrust actions to advance the newspaper against some very big monopolistic competitors. Back in late '98, I believe, I was just looking around informally for contrarian investment opportunities, and I answered an ad that might have been in the Wall Street Journal, one of those ads. They say, you know, send us $10 and we'll get you free subscriptions to a bunch of financial letters. One of the letters I received was Jim Blanchard's Gold newsletter, which is now run by Brian London. Blanchard was writing about how gold was really low, by historical standards in 1998, and somewhere I had heard buy low and sell high. So if you wanted to be a contrarian, back then I began following the monetary metals markets, and I pretty quickly came upon the internet site of Bill Murphy, who is now GATA's chairman. He had just opened it up with an emphasis of commentary on the gold and silver markets. I began following him, and he was almost every day presenting evidence that the gold market was being manipulated by the big traders, particularly the New York investment banks. After reading him for a few weeks, I thought, there's a lot of evidence for this, but he was missing something. And I wrote him a note saying that I think you've got something here, but if what you're saying is correct, what you're seeing is against the Sherman Act and the Clayton Act and 50 state antitrust acts in the United States. And if that's really what's happening, then somebody ought to form a committee to hire an antitrust law firm to sue the bastards in federal court for triple damages under antitrust law. And if somebody wanted to start such a committee, I would pledge $500 to it. Murphy thought that was a good idea. We formed the committee, and eventually I was not planning to become an officer of the committee. I just was hoping it would start, but eventually I became secretary and treasurer. We did get a fairly sizable donation that allowed us to hire an antitrust law firm, and before too long, the antitrust law firm reported back to us that the federal law allowed the United States government to rig the gold and silver markets, that the Exchange Stabilization Fund created by the Gold Reserve Act of 1934 was authorized to intervene secretly in any market in the world for any purpose the U.S. government wanted to undertake. And because the U.S. government was fully authorized to rig markets, our lawyers told us that there really wasn't much prospect in bringing a general rigging lawsuit against the bullion banks or against the government itself if the bullion banks were acting on the government's behalf. Now, from that point on, we concluded that probably the best we could do was to expose the rigging. We filed Freedom of Information requests. We brought a Freedom of Information lawsuit against the Federal Reserve, which we, in a technical sense, we won. The Fed had to pay us court costs for illegally withholding one document from us, though most of their documents on gold they were able to keep concealed. But we just concluded that probably the best we could do was to expose the rigging. And so since about 2000, 2001, we have functioned mainly to investigate, to collect documents out of the government archives, statements by central bankers, legal actions that have come into the public record. We are the repository of the records, the proofs of government intervention in the gold market. And we just try to tell the world about this in the hope that the people who are being cheated by this market rigging will at some point object to it and help us expose it. It really is an imperialist scheme for the developing world, by which the developing world exploits, or the developed world exploits the developing world. It's a general scheme of keeping commodity prices down and supporting the value of the major Western currencies, the dollar and the euro, supporting the value of government bonds in the West, and suppressing interest rates, because gold is a determinant, a powerful determinant of interest rates. There's an inverse relationship between gold and interest rates. So basically we monitor the monetary metals markets. We publicize evidence of manipulation, of rigging. We complain about government actions. We agitate against what we consider a serious injustice, and we try to spread the word. And that's one reason why I'm so happy to be with you here today to discuss it.
Yeah, well, again, we're happy to have you. But I think bastards might be a kind word, Chris. But how exactly does this the gold rigging work? I mean, I know you mentioned suppressing gold prices, but how does it work?
Well, it used to work in a very open and candid way. The gold standard through history was a way of controlling the gold price. The governments would set a gold value to their currencies and try to maintain it just by exchanging currency and gold. The two world wars kind of inflated currencies away, and they couldn't stick to a gold standard, and they went to dishoarding of Western banks' gold reserves in the 1960s. There was something called the London Gold Pool, which was a scheme of a coordinated system of dishoarding of Western gold reserves. The United States, the United Kingdom, I think 6 or so allies of the US and the UK agreed to work in London through the Bank of England to dishoard as much of their gold reserves as necessary to hold the official gold price to $35 an ounce.
Yes.
In 1968, the world began to realize that there was too much inflation in the system, that gold was very underpriced at $35 an ounce. There became a wave of offtake in the London gold market and through the Bank of England. The Bank of England was supplying increasing amounts of gold into the market to hold the price. Yeah. And in early 1968, the United States realized that it had only a few months left of gold left if the offtake continued at that rate. And so the United States asked the British government to close the London Gold Pool. And at that point, the gold price technically broke free, but within a few years, I think starting in about 1971, the Western central banks decided that they could regain control of the gold price by creating a gold futures market and working through the futures market where paper would really control the price rather than real sales of metal. And that's what happened in the 1970s. The gold futures market was created in New York. Governments played in the gold futures market. They would sell a lot of paper gold in order to discourage interest in gold as an investment. I mean, there's even a cable in the State Department archives in the United States from a U.S. diplomat in London cabling the State Department saying that he has surveyed the major bullion banks in London, and they are confident that as soon as the futures market in gold is established in the United States, they will be able to inject so much volatility into the futures market in gold that will scare ordinary investors away. And that's really what's been happening in the decades since. The futures market has been used as the primary mechanism of price suppression because hardly anybody takes delivery out of the futures market. So they set a paper price. The Western governments have infinite money to print, to sell futures. They sometimes use the Bank for International Settlements for leasing and swapping gold secretly, so there's still some distorting going on, but it's much easier for central banks to control the gold price now because they can work through the futures markets, and most of their transactions in the futures markets do not have to be supported by distorting gold.
The London gold pool lasted for roughly 7 years or so, and then I guess, as you mentioned, after their failure, they moved into the futures market. But I think one question is, out of all the commodities, oil and whatnot, why gold?
Well, because gold is an international currency. It's the former world reserve currency. It is potentially the future world reserve currency. It is a direct competitor of every government currency. There are statements in the archives, public statements, by Western central bankers saying that they suppress the gold price in order to support their own currencies. The late president of the Dutch central bank, who was simultaneously president of the Bank for International Settlements, wrote in his memoirs that the gold price was always suppressed at the behest of the United States. Gold competes with government currencies. If the gold price strengthens, it means that the government currency values are declining. Gold is also a determinant of government bond prices and interest rates. Governments ordinarily, they want their currencies to be reasonably strong. They want their government bonds to be in demand in the market, and they want interest rates to be under control. To do that, they need control of the gold price, because if the gold price explodes, that tells the public, the markets, the world, that currencies are not reliable, that government bonds can't be trusted, that interest rates are not accurate. Suppressing the gold price is a matter of maintaining monopoly control over the currency markets by the major central banks.
Okay, yeah, that was going to be one of my questions, where I was going to ask you, how does gold price manipulation or suppression, how does it affect interest rates or even bond prices?
It's a competitive investment. I mean, you know, you can invest in currencies, you can invest in stocks, invest in bonds, or you can invest in the monetary metals. If you go into one, you're disadvantaging the other. Gold is potentially the truth teller about what governments and central banks are doing. They have to keep gold out of the system. In fact, it's, you know, throughout the archives of the U.S. State Department and the Treasury Department and the Federal Reserve, the objective, a main objective of those agencies is very candidly to push gold out of the world financial system in favor of government currencies, or failing that, the special drawing rights issued by the International Monetary Fund.
Within the past year, are there any significant updates you can share with us relating to the gold market manipulation?
Oh, yes. I think probably the most important development in our issue over the last year has been the actions of a congressman from West Virginia, Alex Mooney, who has accepted some of our complaints and has written very probing, critical letters to the Federal Reserve, to the Treasury Department, and the Commodity Futures Trading Commission in the United States. Mooney has asked the Federal Reserve and the Treasury, he's called attention to some of our complaints, and he's asked the Fed and the Treasury to tell him what is the United States policy on gold today. More than that, he has asked the Fed and the Treasury to specify which markets are they secretly trading in, and what is the purpose of that secret trading. Mooney has gotten a partial answer from the Federal Reserve. Federal Reserve Chairman Jerome Powell wrote back to him that the Fed is not trading in gold. That wasn't really the question Mooney put to him. Mooney asked, what markets is the Fed trading in? Powell responded only that the Fed is not trading in gold. Well, what other markets is the Fed trading in? The Fed won't say. Powell wrote to Mooney saying that the Treasury would answer his questions on the Treasury's own behalf. That was a year ago. To this day, the Treasury has never answered Mooney's questions as to which markets is the Treasury Department of the United States secretly trading in. Now that's very telling. Now, a few months ago, I wrote to the Commodity Futures Trading Commission asking whether secret trading by the United States government or government agents that manipulates markets, is this kind of trading subject to the jurisdiction of the Commodity Futures Trading Commission, or is secret and manipulative trading by the U.S. government completely legal? As I read the Gold Reserve Act of '34 and the powers of the Exchange Stabilization Fund, it seems to me that secret manipulative trading by the U.S. government is legal. And in fact, I was in federal court in Boston in 2001 when we were bringing a lawsuit against the Fed and the Treasury and other central banks. A assistant U.S. attorney got up and told the court that without admitting that the U.S. government was secretly rigging the gold market, as we complained, the assistant U.S. attorney maintained that the U.S. government had the power to secretly rig the gold market, and because the government had that power, our lawsuit should be dismissed. So there's an assistant U.S. attorney says, yes, the U.S. government does have the power to secretly rig the gold market. He did not admit that it was happening, but he said the government claimed the power to do that. Now, I wrote to the CFTC basically asking this question. Do you have jurisdiction, you, the commission, have jurisdiction over manipulative trading by the U.S. government or by a broker acting on behalf of the U.S. government? CFTC sent me a form letter in reply that didn't address my questions at all. We sent this correspondence to Representative Mooney, who was offended by it, and he has sent his own letter to the CFTC saying, answer GATA's questions. Do you have jurisdiction over manipulative trading by the U.S. government or government agents? And the CFTC has yet to answer Representative Mooney either. To me, that's as good as an admission that the United States government is secretly rigging markets. Unfortunately, we cannot get any major financial news organization to pick up on these questions.
With Chris Powell, Jerome Powell, can't you just give him a call and, hey, cousin Jerome, can you?
Yeah, as far as I know, we're not related.
Okay. If I can go back to Article 1, Section 10 of Constitution, only gold and silver for payment of debts. What's your opinion on that?
Unfortunately, that article, that provision, is not written the way the founders intended it. They wrote it that no state should make anything other than gold and silver, the legal tender. They didn't say that the federal government could not make something other than gold and silver legal tender, and so that's why we have what we have now. And I'm not saying that there shouldn't be other forms of money. I'm saying that let government issue what it wants, let people use what they want, but tell us what you're doing. Government should be accountable and transparent and function in the open, especially when it's going into the markets. Because what the United States government and other governments are doing right now, they are manipulating markets, they are deceiving investors, and they are cheating people all over the world this scheme works only because it's a big deception. Now, the government can do what it wants, but it's got to do it in the open.
Chris, what do you think it's going to take for this manipulation to end? What circumstance or situation?
There's a few options. I think the most likely option is the outcome that happened with the London gold pool. The metal available to the governments for rigging the market was simply running out too fast. Now, there's evidence that it's running out again. We know that major countries, China, Russia particularly, but other countries have been buying gold lately. That implies some strain on supply. And if those countries are acquiring gold again as a monetary resource for their reserves, at some point the metal available for price suppression, always some of it is needed, will run out. At that point, there very likely will be another international currency revaluation. Likely it will peg gold much higher than it is today. That's one possible option. Another option is simply that ordinary investor demand will put enough pressure on the suppression scheme to force the suppressors to retreat. I think they will generally retreat, and we will have a gradual increase in the gold price at least over the next few years, because supply is strained right now. Or, you know, we could have a totalitarian response. If gold is running out, perhaps major countries will outlaw the private possession of gold. Maybe they'll confiscate the mines. Maybe they will, or nationalize the mines. Maybe they will try to confiscate privately held monetary metal. They might get away with that in the United States. I don't think they will get away with that in Singapore or many other countries. But I think slowly the supply of gold available to suppression will run out, is running out as it ran out with the London gold pool in 1968. I think there will be a revaluation of gold. I think most likely it will come by central bank proclamation. I think we can force their hand a little bit. I think we can hasten the day by telling people, get your gold, get your silver, take it out of the banking system, put it into a vault like this. And that will hasten the day. But when they are running their own metal down so far that they don't want to lose anymore, I think at that point there will be an international currency revaluation conference, which will be held in secret, maybe in Basel, Switzerland, and on a Sunday evening before the Asian markets open, they will announce that there are new exchange rates. They may announce that gold will back certain currencies at you know, a 20% level, a 40% level, whatever, or will become convertible in some way. But I think the central banks will want to look like they're controlling. They're still in control. That the gold price has gone up because they did it, because they said it might be in the public interest. A couple of U.S. economists, Paul Brodsky and Lee Quaintance, 8 years ago, wrote a scholarly paper hypothesizing that what central banks were really doing was trying to keep the gold price down in the futures market while they acquired more real metal and then redistributed the world gold reserves among themselves, so that countries that had very large US dollar denominated foreign exchange reserves would be hedged by gold against the inevitable devaluation of the dollar. An Italian newspaper whose name in English is The Sun 24 Hours, published a report a few weeks ago basically accepting the hypothesis that Brodsky and Quaintance came up with 8 years ago, that central banks were using the futures market to keep the price down while they obtained more gold for themselves, and that there might be a revaluation at some point in the near future. I think that's probably what has been happening. But again, that is a cosmic deception. They've been rigging the market down, they've been deceiving investors, they've been cheating investors, they've been cheating the developing world, and then they will spring the revaluation on us after they've cheated everybody out of their metal.
Do you think the central banks, which have been buying, I believe the most gold they've bought since in the past 50 years, and Basel III, which moved gold to tier 1, do you think there's a link with that?
Very possibly. You know, as of the 29th of March, according to the Bank for International Settlements, gold is to be valued on an accounting basis as equal to the US dollar and sovereign government bonds. That is, the Basel III rules are saying that gold is as good an asset as anything else. I mean, I would argue it's a better asset because there's no counterparty risk with, you know, monetary metals, gold or silver. That may be an encouragement to commercial banks to buy gold because it's a good diversifier, and now it is credited as a superior asset. Will it happen? I don't know. I think central banks and their agents will do all they can to suppress the price of the monetary metals, to suppress interest in the monetary metals until they're just on their last legs in their reserves, and at that point they will revalue. And everybody who thought that gold and silver were trash will be told that no, actually they're the great assets now, and they have thereby, by this revaluation, just reliquefied all the major central banks. You know, the dollar will go down, government bonds will go down, but correspondingly the monetary metals will rise in value, so that central banks that were holding a lot of dollars won't have as much value in dollars anymore, but because gold and silver have been revalued, they will come out even.
Okay. Purely speculative, but best guess. If gold were to be revalued, or if there were never suppression going on, where do you think gold would be valued at today?
Oh, well, you know, the rap on gold for years has been that it has not kept up with inflation. To me, that's the proof of gold price suppression. Everything else keeps up with inflation by definition. If gold hasn't kept up with inflation, there's a reason for it, and the reason is that governments have been keeping it down. Now, if standard measures, if the standard ratio of gold to the basic money supply in the world, if that traditional ratio was restored, the gold price would be many thousands of dollars per ounce. Or if there was some partial convertibility restored, the gold price would be many thousands of dollars an ounce. I don't make predictions, but Jim Rickards, who is a very astute financial expert, has done consulting work for the government, the CIA. He's been part of U.S. government war games. He has U.S. government security clearance. Rickards constantly argues that a price in a revalued regime of the world financial system would be $10,000 for gold. And he thought that that could be conservative.
Yeah, okay.
Now, you know, that's a wonderful dream for gold investors. You know, I don't like to go there. It's all we can do in GATA to find out what is. To predict what will be is beyond us. But you want a prediction? Rickards has made that prediction on the basis of an assumption that a traditional ratio of the gold supply against the currency supply might be restored. I'm not going to argue with him.
Neither am I. Especially because we like to have him on, so I'm not going to argue with anything he says. But the other side of the coin, 2011, gold did have a fairly good high. How do we explain price manipulation for that 2011 spike?
Yeah, well, that's you know, pretty easy, because from, you know, about 2000 to 2011, central banks were constantly, every few weeks, they were announcing gold sales, and yet the market kept going up. I mean, the market wouldn't keep going up if central bank gold was really hitting the market. I argue that the gold sales that the central banks were announcing in that decade were not really sales at all. They were closing of gold leases to bullion banks at the current price level. They were basically the cancellation of leases. If central banks lent out a lot of their gold in the 1990s, drove interest rates down, drove gold prices down. By 2000, they announced they were selling gold, but the price kept going up. In my view, they were just simply closing out the leases of the gold that they had put out in the previous decade. They knew that they could not get that gold back from the bullion banks without exploding the price. So they just allowed the bullion banks to close out their leases for the nominal cash value of the price of gold at that time. And so for that decade, gold just kept going up. And when you got to 2010, 2011, the market was beginning to notice this, and there was investor interest in gold, and the price started spiking. And I think at that point, the central banks got back together. I'm just guessing, but they are the biggest players in the gold market. Central banks got back together and said, hey, this is getting out of control. We got to start smashing the gold price down in the futures market. And I think that's what they did.
Chris, what keeps you motivated to continue championing what GATA does?
Spite. Well, one reason is that nobody else is doing this. This is the work that should be done by the World Gold Council or some organization like that. Unfortunately, I think the World Gold Council functions only to make sure that there never is a World Gold Council. You'll never find the World Gold Council talking about central bank intervention against the gold price. So if we don't do it, who's going to do it? I would much prefer the World Gold Council do it. I wouldn't mind retiring from this work, as happy as I am to be here today. I mean, it's been a great education. I've learned a lot. It's been scary in some ways and discouraging in some ways, but I mean, that's one reason. Maybe a bigger reason is simply this is, I think, the pursuit of justice on an international scale. If you believe, as GATA does, in free, transparent markets and limited and accountable government, something has to be done to expose where the markets are not free and transparent and where government is not limited and accountable. Now, the gold price suppression scheme is a scheme as evil, in my opinion, as the Nazi scheme in the financial markets in Europe was during their occupation of Europe during World War II. People don't realize that the primary mechanism of the Nazi expropriation of occupied Europe in World War II was not done by sending the Gestapo or the SS into the Louvre and taking the paintings off the wall, or going into the Bank de France and looking for any gold that hadn't been shipped to America already, though the Nazis did confiscate gold in central banks wherever they were able to. The main mechanism of the Nazi expropriation of occupied Europe in World War II was manipulation of the currency markets. The Nazis would go in, take over a central bank, and they'd change the exchange rate between the occupied country's currency and the Reichsmark. All of a sudden, the Reichsmark would be worth so much more than the occupied country's currency, so the Germans could come in with Reichsmarks and buy everything up because they controlled the exchange rates. In Eastern Europe, where there were not developed central banking systems, the Nazis circulated these currencies that could be used locally but were not convertible into anything in Germany itself. The result of this currency market rigging was that all the production in occupied Europe flowed out of occupied Europe and into Germany itself. It was control of the currency markets by which Germany expropriated occupied Europe in World War II. Well, what is happening today? The Western governments are controlling the currency markets, and by controlling the currency markets, they are expropriating the developing world. They are causing the developing world to send its production to the developed world at an unfairly low price because they have overvalued the Western currencies. It is the same mechanism that the Nazis used in occupied Europe in World War II, but nobody can talk about it.
Yeah, I was just going to ask, why do you think we don't see this? Why don't we see these things happening?
The mainstream financial news organizations are, I think, totally intimidated by their governments. There's a few here and there that will pick up on this issue. When I've come to Asia in recent years, I've been able to get on CNBC in Hong Kong, and I've been invited on CNBC again. I'm grateful for that. But we have a mailing list for most of the major financial news organizations in the world. I send them all our important stuff. They won't touch it. They will not do the basic journalism of looking at Representative Mooney's letter to the Fed and the Treasury and calling the Fed and Treasury up. Hey, are you trading secretly in markets? And why are you doing this? I mean, are you rigging markets? What's the purpose of this? They won't even ask. Now, that's very disappointing to me because I'm a journalist at a local paper in Connecticut. It's disappointing to me just simply as a citizen of the United States. But also disappointing is the indifference or the cowardice of the monetary metals mining industry. Now, I understand that cowardice. Mining is the industry that is most vulnerable to government. Any mining company needs, mining patents and permits, and it has to comply with environmental regulations, and there's royalty requirements. Any government can shut down any mine like that on any pretext. So I understand why mining companies are afraid to alienate governments. Further, mining is the most capital-intensive industry in the world. Typically, it requires more than $1 billion of investment or financing to get a mine started. When you need that kind of big money, you have to rely on the major international investment banks that are very frankly agents of the government. They're all primary dealers in U.S. government securities. So when I ask a gold and silver mining company, please help us or please complain about the manipulation that is suppressing the price of your product, the mining company has to think, well, do I want to alienate my government and cause my government to make trouble for me? Do I want to alienate my own bankers and tell them to make trouble for me? It's a very brave mining company that will stand up against this scheme and complain about it. A few have done that. I'm very grateful to them. But this is the work that the World Gold Council should be doing because it would function on behalf of the whole mining industry, and the government couldn't retaliate against a particular company. It would be harder for the government to retaliate or for the investment banks to retaliate against the World Gold Council. But the World Gold Council, in my opinion, exists to make sure that nobody ever does the job.
Interesting. Chris Powell, how can we let the viewers find your work and the work of GATA?
Oh, well, we're on the internet at gata.org. Typically, we send 2, 3, 4 dispatches out every day. We invite people to join our mailing list. That's easily done at our internet site. There's a section in the right-hand column of the homepage where you can subscribe to our dispatches. We are a 501c3 organization in the United States, which means we are recognized by the U.S. Internal Revenue Service as a nonprofit educational and civil rights organization. So contributions to us, at least, are federally tax deductible in the United States. I'm sorry I can't offer that tax deductibility outside the United States, but we are very grateful for any financial contributions to our work. There's a section on our homepage, I think the page is labeled How to Help. People can contribute to us by check or credit card or even Bitcoin if they want to. We rely on donations from individual investors, and some companies help us. We're always scrounging for money, but we have some very loyal supporters who send us money from time to time. I will freely admit that anybody who wants to send us $5 will be giving us $5 more than Newmont Mining or Barrick Gold has ever given us.
Okay, well, Chris Powell, we thank you again for stopping by, and we wish you and GATA all the best.
Thank you very much.
Thank you, Chris.
That was Chris Powell from the Gold Antitrust Action Committee, known as GATA, sharing his thoughts on gold price suppression and manipulation. To see more of Chris's work, visit www.gata.org. If you like this video, please click the like button and subscribe to the SBTV channel to be updated on new content, and do find us on iTunes and Spotify.